Welcome to Veranda CA. Now we're going to start our fast track revision for chapter number 2 in your paper 7. So we're dealing with financial and accounting systems. Are you all ready? If yes, let us begin. What is a system? We all know examples: digestive system, education system, ecosystem. Yeah, it is a set of principles or procedures according to which a transaction is done, according to which something is done, set of things working together. Tell me, if the windpipe in my digestive system, if the food pipe is not working, will my digestive system function well? No. So all the components of a system need to be working absolutely fine for the entire system to be working well. Awesome. So we have input, output, feedback mechanism in all the systems. You have some input, you have some processing to be done, you have some output in every system. Internal steady state despite changing external environment. So the external environment can be changing, the food that I eat can be changing, but the process of my digestive system is going to be the same. The food that I eat can be changing, right? So my internal state is going to be steady. It consists of subsystem, and every subsystem has an influence on the working of the entire system. Okay. So similarly, we are now going to study in detail about the financial system. What is the meaning of a process? Anything that uses input, converts itself and produces some output is known as a process. Example, production process. Yes. We have marketing process, sales and distribution process. Anything that uses input, uses a process and gives out an output is known as a process. Every software, like you have seen, has two sides to it. Like how every coin has two sides, like that every software has two sides. One is the front end and the other one is the back end. Now the front end is the piece of software which interacts with the users. So any choose your favorite online shopping sites. Yeah, how does the front end looks like? It has coupons, deals, offers. Yeah, it's very colorful, attractive. It has list of the products that the site sells. So it's very colorful, attractive, right? Versus the back end. Back end is for the supplier to upload his products onto the site. Now when he wants to upload, he does not need all these graphics and all. He needs menus, inventory, reports, advertising tools. Yeah, now all these menus have multiple options. So my back end is very technical looking in nature. Some report analysis, yeah, not many colors, not many graphics. It is very, very technical in nature. So my front end versus my back end of any software. Amazon front end, where you can see the products, back end is going to look like almost like a very big Excel sheet, very data oriented. Now the question is, write down question number 1, why separate front end and back end? Why do we need separate front end and separate back end in every software? Okay, so in your book they are comparing this to having a different person doing the cooking in a restaurant versus a person who is serving the dishes in a restaurant. Okay, so the chef is different from the waiter, and that logically makes sense, because imagine if both were the same person, it would be a chaotic scene. So it is different. It is beneficial if there are specialized people to do that work. So we have separate front end and back end. Now let us see the points that we are going to discuss. Number 1, domain expertise. Domain expertise. The front end is for handling user requests, communicating with you and me. Back end, handling and storing data and communicating with the front end. Handling and storing data and communicating with the front end. Then we have presentation. Front end, colorful, appealing, graphics, and back end is quite technical in presentation, in appearance. Then we have the user experience. Front end, process data. It deals only with process data, not raw and intuitive data. The front end should be so robust that minimum inputs need to be given by the user. On one click, the front end should display all the possible options. It should not ask too many questions to the user, because then the user gets bored and moves on to another site. So the front end needs to be very, very very complex in design, in the sense that it should be structured in a complex way, but very simple for the user to understand, and just one click and things are done. One click and things are done. Needs to be like that. User experience with the front end needs to be very smooth flowing. Speed and language. Now speed, we definitely need a separate front end and back end for load balancing. If the front end had to do all the work of a software, it would crash. It wouldn't be so fast. So we need a separate front end and back end for load balancing. Language. Now what is the language spoken by the front end? The language that is understood by the user, because it is meant to be built for the user. And the language by the back end is a technical language. Technical language. Quick revision of why do we need separate front end and back end. Number one everyone, domain expertise. Domain expertise. Number two, user experience. Speed, language and presentation. Domain expertise, user experience, speed, language, presentation. Domain expertise, user experience, speed, language, presentation. Clear? Very good. Let's move on to the next question. Installed versus cloud-based application. What is the meaning of an installed application? Application that I can install on the hard disk of my computer that does not require an internet connection to operate or work. Okay, so applications that are already there on my computer, take for example Paint. Paint software already there. Can you access Paint software on the move? For example, you have your mobile phone, you're traveling. Can you access the Paint software? No, you need to be on your computer in order to access Paint software, because it is an installed software. Installed software. And take an accounting app that is cloud-based, Zoho app. So now my Zoho app is cloud-based, which means on the move, on the go, I can access it anytime, anywhere. So Zoho or any other cloud-based software for that matter, Deskera, yeah, so many accounting and financing softwares are coming up right now in the market, and they are all cloud-based. So this is how it looks like. They have a dashboard, they have so many options, they have graphs, infographics, right? So this is my cloud-based software. Here I do not have to install anything. I need a web browser in order to go inside the web browser and access the application. Alright, so in this case, installed and cloud-based. Now please know that cloud-based is also known as web-based software. Also known as web-based software. What is the difference between the cloud-based and web-based software? What is the difference between a cloud-based and web-based software? Before we get there, let me just write it for you. The code word is I am a dreamer and doer. I perform with flexibility. I am a dreamer and doer. I perform with flexibility. Now this I stands for installation and maintenance. Installation and maintenance. A stands for accessibility. A stands for accessibility. A for accessibility. M for mobile application. Mobile application. Dreamer and doer, take out the D and D from it. Data storage and data security. Data storage, data security. Perform is for performance and flexibility is for flexibility. Perform for performance, flexibility for flexibility. Alright, let us see the points. Are you all able to remember the side headings? I am a dreamer and doer. I perform with flexibility. I stands for installation and maintenance. A stands for accessibility. Is it only when you're in office, or is it 24 into 7 into 365? Accessibility. M stands for mobile application, dreamer and doer. D for data storage, D for data security. I perform with flexibility. Perform, performance. Perform means performance. Flexibility, the word is flexibility. Clear with the points? Yes, can we move on? The first point, installation. Tell me, in a cloud-based software, do you need installation or not? No, I don't need installation in a cloud-based software. It is there on the web server. Okay, I can access it using the internet and the web browser. Now, the maintenance is the responsibility of the service provider. Service provider is responsible to install upgrades, patches and all that on my cloud-based software. Next I have installation and maintenance. Installed is on the hard disk. This one is on the web server. Accessibility cannot be used anywhere. Here it can be used anytime and anywhere. Anytime and anywhere. Mobile application. For an installed software, it is a little difficult to set up the mobile application, but cloud-based, it's definitely possible and easy to set up a mobile application. Okay. Data storage. Now, say Tally earlier was an installed software. So when Tally was there in my office system, then the user had full control over the data that is there on Tally. But if this data is there on Zoho, then I do not have full control on it. It is with the service provider. So it is based on SLA, service level agreement, on how we take the duties and responsibilities of the data that is stored up there. Next point is on data security. Data security. User has full control on data, and cloud-based data security is a challenge because the data is not in my lock and key. It's not under my control. The SLA contains backups and disaster recovery alternatives. In case of any unplanned event, the SLA will contain on how the duties and responsibilities should be shared. What happens to the data, right? Now, performance, near performance, write down internet. Performance means internet. So, because this does not require any internet, it is very fast. Fast because do not need an internet, and it is installed in the system itself. So, it's faster to access it. But over here, an installed or cloud-based software, it depends on the speed of the internet. Okay. So, if I have 4G, 5G, whatever is the speed of my internet, that fast I can upload transactions on a cloud-based application. Flexibility means cost. So, this means internet and flexibility means cost. Now, higher capex. For me to put an installed software, I need a personal computer, I need a server, yeah, I need a hard disk, I need so many computers, right, I need so many subscriptions or so many installation instances for all my employees. So, under an installed software, the capex or the capital expenditure is higher. Under cloud-based, flexible against capex and opex. Flexible against, because it is, cloud-based is pay per use or pay on demand. If I want to scale up, pay on demand. If I want to scale up my operations, I will pay more. Otherwise, I can go with the existing subscription. I can alter my cost based on my demand. Whereas in this, I take some fixed plan, and no matter how the transactions are, use that fixed plan. Clear? So, performance talking about internet and flexibility talking about cost. Clear? Okay, quick revision all of you. We are talking about the differences between a cloud-based and an installed software. Please be sure that this is different from the difference between front end and back end, or why do we need front end and back end. Yeah, over there the points were, come on, that previous question division, the points were domain expertise, user experience, presentation speed and language. Domain expertise, user experience, presentation speed and language. In this, the difference between installed and cloud-based. So, please be careful what is the question that is being asked and write accordingly. Difference between installed and cloud-based. Now, the code word for this is, I am a dreamer and doer. I perform with flexibility. I stands for installation and maintenance. A, accessibility. M, Mobile application, dreamer and doer, DD. Data storage, data security. Data storage, data security. I perform with flexibility. Performance. Performance means what? Internet. Flexibility means cost. Alright, moving on to the next thing, types of data. Types of data, we have two types of data when it comes to any financial system. One is a master data and the other one is a non-master data. Non-master data. Master data which stays relatively permanent throughout the life of the organization. Non-master data which keeps daily updating itself. For example, transactions are non-master data. Permanent, does not change, not typed by the user. Usually, if I create a customer in my system, every time I make a sale to that customer, I don't need to type the name of the customer. I just type the first two letters and a drop down comes. From that drop down, I can pick it up, not typed by the user. Entry is less frequent. There is a 4i check, which means people need to have two-factor authentication to check if the master data is entered rightly in the system, because it is going to be permanent for the most of the period of the organization. Next, we have non-master data. Non-permanent, expected to change and typed by the user. Example in this, it's an instance from a software, accounting software. If you see sales number 2, okay, it changes every day, non-master data. Party account name, say National Traders. This National Traders is a master data. Okay, credit limit, it is already defined, master data. Sales of some item, say item X, 25,000. Now this 25,000 is going to be my non-master data, because every invoice is not going to be 25,000, it is going to change. But the credit limit is going to be constant for the party until the management decides to change it. So clear between the difference between master data and non-master data? So here I have given a list of data which is personal master data and personal non-master data. For example, date of birth could be personal master data, it does not change ever, but the age could be a personal non-master data. Personal non-master data, it changes every year, right? Likewise. Now vouchers and ledgers. What is, when we studied accounts in our 11th grade, 12th grade, that's when we studied the classification of accounts as real account, personal account and nominal account. But when it comes to our accounting software, this is not the classification. The classification is debit, credit, income and expenditure. Okay, debit, credit are the two main classifications. Under that we have assets, liabilities, income and expenditure. Under the two classifications of debit and credit, we have assets, liabilities, income and expenditure. Because every software needs to create a profit and loss statement, balance sheet, right? Debit balance, credit balance. Debit comprises of assets and expenses, credit comprises of income and liability, and expense and income forms the profit and loss, and assets and liabilities form the balance sheet. Pretty simple. Now, types of master data. What are the types of master data that we are going to study? Accounting master data, inventory master data, statutory master data and payroll master data. Statutory master data and payroll master data. Alright, accounting, inventory, statutory, payroll. Accounting, inventory, statutory, payroll. Under the accounting master data, you all know the types of accounting journals that are possible. Contra, payment, receipt, you have debit note, credit note, you have journal vouchers, yeah, all the sorts of accounting vouchers that are possible. Inventory master data, purchase, sales, everything which is linked to the raw materials, finished goods, inventory. Delivery note, stock journal, receipt note. Statutory master data would be my all my taxes, GST, TDS, income tax, all the heads or the master data or the account that I open for the statutory data. Payroll master data is going to be attendance, employee name, payrolls, yeah, employees, attendance, that's going to form a part of my payroll master data. So, 4 types of master data: accounting, inventory, statutory, payroll. Accounting, inventory, statutory, payroll. Now, what is a data warehouse? What is a data warehouse? Yeah, so what we're studying, what is the structure or sequence of what we're studying is, first you understand the basic transactions, you understand the kind of softwares that are possible. In a software, why do you need to have a front end and back end? Okay, then now that you have a software, you need to store data inside it. You will store data in something known as a data warehouse. Let us see how a real data warehouse works like. So this is the data warehouse. It takes the information from data sources. Now this data sources could be my accounting software. It could be accounting software. It could be text files. Yeah, it could be text files. It could be some customer database. It could be customer database. It could be some social networking sites from where I want to pull out information, right? So information from unstructured or semi-structured information is pulled out here. Data warehousing is a place that helps in storing the data, in analyzing the data, in processing and analyzing the data, and finally giving me the end result, which could be in the form of some analytics or some reports that I can use for decision making. Data warehouse is a repository of an organization's electronically stored centralized data. Repository of an organization's electronically stored centralized data. It helps in reporting and analysis. It helps in business decision making. Now it uses the technique of ETL. ETL. Tell me what is ETL? Extract, transform and load. Extract, transform and load. It uses the technique of ETL. Operational system that performs day-to-day transaction processing is known as data warehouses, and transforming raw data into meaningful information and making it available on time is known as data warehousing. Clear? ERP, Enterprise Resource Planning System. It is the overall business management system. Now we're being introduced to a concept called ERP, Enterprises Resource Planning. Enterprises Resource Planning. It is a software that helps in managing all the functions in an organization. What are the so many functions in an organization? Finance, purchase, HR, then we have supply chain management, we have project management, right? So many modules or so many functions in an organization. Can I do it independent of each other? That's not possible. Okay, I cannot function in a way where all the departments in an organization are independent. It all needs to be integrated together, and this integration happens in an ERP software. ERP software is the overall business management system which helps in coordinating the RIA, RIA stands for Resources, Information and Activities. Resources, Information and Activities. Based on common database and modular software design. What is the meaning of modular software design? Modular kitchen, yeah, where you can get the drawers separately made and then fit it there. Then you can get the platform made, come and fit it there. Then you can get storage made separately and come fit it there. So you fit up components in stages. Yeah, in stages. You fit up the components here and there. You can build it anywhere else. So similarly, modular software design means now each components can be designed in some specific way. Yeah, in some specific way. Now these components can be come and fitted in my ERP module as per the needs and requirements of my organization. Clear? As per the needs and requirements of my organization, I will decide that okay, I'm a service-oriented company. I do not need any materials management module. Clear? I am a customer-centric company. I definitely need the CRM module, customer relationship management module. Right? Like that, I can decide based on the need of my entity what module needs to be put in. Modular software design and a common database means that so many departments. It could be located all over the country, even outside the country. I could have my finance team sitting here in South India. I could have my marketing team sitting or operating from North India, right? I could have different teams operating from different places. But when they are going to store the information in this ERP software, it is going to be saved at one data warehouse, one common database that is going to get all the data and store it together. Are we clear on that? On a common database and on a modular design in stages. Provides right data at the right time to the right users to make the right decisions. Right? Okay. Benefits of an ERP system. Now this is a good question. Can be asked in the exam. Benefits of an ERP system. Let us see how we are going to study this. Now let us divide, there are so many sub-points under this. What we are going to do is divide it into two buckets, bucket 1 and bucket 2. Under bucket 1, we have three side headings, okay. Tick, time, information, cost. Time, information, cost. Under time, 3 points. Under information, 2 points. And under cost, 2 points. Time, information, cost. 3, 2, 2. 3, 2, 2. That is your bucket number 1. Now what are the 3 points under time? Time, 3 points. On time shipment. On time shipment. Reduce lead time, reduce cycle time. Lead time, cycle time. 3 points under time. Information. Information is accurate and information is integrated. You know the meaning of integrated? Yes, linked to each other when necessary. Linked to each other when necessary. Okay. Information is accurate because there is only one software which all the departments are using, so the possible of mistakes are very less. Information is accurate and information is integrated. Okay. So time, information and cost. When we talk about cost, we are saying that there is better resource utilization, so my cost is less, and reduced quality cost. Reduced quality cost. So bucket 1, benefits of ERP system, divided into time, information, cost. Time, information, cost. 3, 2, 2. 3, 2, 2. Under 3, I have on-time shipment, reduced lead time, reduced cycle time. Lead time and cycle time, you follow that. It means the P2P and O2C model. Yeah, how much time it takes for me to place an order and for me to get the material. How much time it takes for my customer to place an order with me and for me to deliver his material to him. Okay. Reduce lead time, reduce cycle time, on-time shipment. And then I have information. What is it? Accurate, integrated. Accurate, integrated. Okay. After that, I have cost, reduced quality cost and resource utilization. Better resource utilization. So benefits of ERP. Bucket 1, time, information, cost. Bucket 2. Bucket 2 is management, customer and supplier. Management, customer and supplier. Now the breakup goes like 3-1-1. 3-1-1. Under management, we have 3 points. One is increased flexibility. Increased flexibility. Another one is adaptation to technology. I can adapt to technology very well because I have all the data readily available with me to analyze how I can improve my sales. So adaptation to technologies, increased flexibility and better planning. Better planning. Increased flexibility, latest technology and better planning. Then I have my customer and supplier. Obviously my customer satisfaction is more because I am giving him better services. I am processing his order faster, prime, 1-day delivery. Correct? Because I have all the information and all the systems in place in order to make his experience a satisfying one with my company. Right? So management, customer satisfaction and supplier performance is better. Supplier performance is better. How using an ERP can my supplier performance be better? Can you tell me that? Because the supplier knows that I have a track of when I had raised the PO. Yeah, I have quotations from his competitors. Yeah, in case he is not going to give me the best of his service, I have all the information that I can blacklist him or not deal with him. So ERP also helps in improving my supplier performance. Are we clear about the two buckets left in ERP? Two buckets that we discussed for all the points. Clear with all the points? Yes? Time, information, cost, 322. Management, customer and supplier, 311. 311. ERP implementation risk. Now that we've finished ERP benefits, now we're going to the risks and controls in an ERP environment. Risks and controls in ERP environment. Please note that this question is divided into 5 points. Okay. Number 1 is, okay, what is the meaning of risk? When I'm implementing an ERP system, a lot of hurdles could come in place. Why could there be hurdles? Because my employees may say that no, we don't want a new system, we're comfortable with the old system. My management could say that we don't have so much of money right now to spend on this, we can rather use it for working capital, for buying of more stock, or engaging more people to do the services. The people who I hire for consulting for ERP, yeah, they may back out, yeah, or they may not perform their services very well. So like that, there are many risks that are involved. By the time my ERP gets updated and made, by that time technology is completely different in the market, because we know how fast technology is growing. So by the time my ERP is completed, because it takes around 4 years or 3 years for an ERP to get built and developed. So till that time, technology may have been changed or outdated, right? So many risks when it comes to implementation of ERP. If the integration is not done very well, if one module is showing some other data, if another module is showing some other data, right? So I need to have a I have to have a trial and run error for my ERP before I'm very sure that it's perfect, before I put it in complete operations. Okay, so ERP implementation risk divided into 5 categories of risk. Okay, category number 1 is people risk. Risk related to people of the organization. Second is process risk related to the process in an organization because of ERP implementation. People, process. Then I have technological risk. Could have a few technological issues while implementing ERP. After that, I have implementation risk. During the implementation of ERP, what are the hurdles that I can face? And finally, I have post-implementation risk. After implementing the ERP, is there something that I need to be careful or aware of? Yes. People, process, technology, implementation, post-implementation. People, process, technology, implementation and post-implementation. Under people risk, if you're all ready, we can go for people risk. Under people risk, I have change management. Okay, people are not very comfortable when things are changing around them. Okay, when things are changing, suddenly in your inter they add a new subject. Yeah, you will feel agitated about it. You won't be welcoming of the new change, right? So change management, people are not very comfortable when any change happens. So there will be a change in their job profile. For every risk here, we have a related control. Now this control will be the opposite of the risk. Job profile will change, functioning of the organization will change, the hierarchy will change. Okay, in that case, I need to give them a detailed document about what they need to be doing, how their jobs are going to be changed so that they do not feel lost. Scope of the project will also change. Earlier, what had to be done manually is now going to be done through the system. So the scope of the project will change. So under change management, boys and girls, we have 3 things. One is job profile. One is the scope or the hierarchy of the organization. And third one is the scope of the project. Next, training. See, when I'm going to have an ERP system with so many options, so many modules, yeah, I need to train my employees. I cannot just tell them tomorrow we are going to have a new software, be prepared. No, I need to train them. I need to invest in training. So training takes a high budget. It costs a lot for the company. Company needs to allocate funds for that. Next, I have staff turnover. Staff turnover means people will listen about this ERP and leave the job and go. Allocation of employees with tasks matching their skills. In order to prevent staff turnover, what I need to do is match people with the skills or their interests. Okay, when I do that, they will stay in the organization. Top management support. Now this top management is going to say that there are huge resources required, so they need to be with us throughout the implementation process. One fine day if they get up and say that no, I do not have any money, then what are we going to do with the ERP? Consultants. Consultants means the consultants who come to implement the ERP in our company. Like we discussed earlier, it takes around 3 to 4 years. So they need to be deployed in our company for that long. In that period, they need to get comfortable with the culture that is going on in the company. Get familiar with the organization culture. Get familiar with the organization culture. Change management, training, top management support, staff turnover and consultants. Staff turnover and consultants. Okay. Quickly, first one is people risk. People risk, under people risk, change management, top management support. Then we have consultants outside, training them, and then under people risk, we have, what was one more point? Training, staff turnover, staff turnover, okay. Process risk. Now there are two types of process that could be under risk, okay. One is BPM and BPR, business process management and business process re-engineering. Business process re-engineering. Business process management, business process re-engineering. Now what is the meaning of process management? I need to have the processes linked together in a sequential order and real-time linkage between the information. Real-time linkages between the information flow. Business process re-engineering, the word itself means that not just a small change, but a major dramatic change. Major dramatic change and improvement. Okay, so is my process team ready to take up this change? Is my top management and my functional level ready to take up an entire overhaul of processes? I need to evaluate that. Okay. Next we have technological risk. RTP question. What are the technological risks related to ERP implementation? Risks and controls. This question always comes as risks and controls. Now under the technological risk, see, number one is that my ERP has so many modules, which we will discuss eventually. Now in that so many modules, what are the modules that I need, I do not need, I may not know at day one. Okay, so I'll get confused with a software which is given to me with so many modules. I get confused till I learn to use that software. So point number one, software functionality. Software functionality. Point number two is technological obsolescence. Okay, so by the time ERP is already ready for use, by that time the technology would have changed. So technological obsolescence. Technological obsolescence. Upgrades and enhancement. If I am not making my ERP upgraded with the current laws, for example, GST rate for my product has changed, but I have not updated that in the system. That is a technological risk. Enhancement and upgrades. The software needs to be upgraded with the latest developments. And number fourth is application portfolio management. Application portfolio management. So most of the functions are done using the ERP. But certain specialized or complex functions such as human resources or confidential, you cannot put that on the ERP for everyone to see. Human resources, you need to put them separately. In that case, what happens is, I need to link my ERP, the main ERP software, I need to link it wherever necessary with my human resource software. With my human resource software. Likewise, I may have another software for, say, debtors management. I need to link that with the ERP at the right places. Link that to the, I may have a different software for customer relationship management. I could have it all together, but in case I need really specialized softwares, it is better to have a separate module. Now, if I do have a separate module, how do I link these together? What if this is on private cloud and this software is on public cloud? In that case, will I be able to link it together? Right? So now that challenge is there, and that is known as application portfolio management. Application portfolio management. So 4 things, boys and girls, under technological risk. What are the 4 things under technological risk? Number 1, too many menus. Software functionality. Software functionality. Technological obsolescence. Technological obsolescence. Number 3 is my enhancements and upgrades, and number 4 is application portfolio management, Clear? Perfect. So we are done with people risk, process risk, technological risk. The fourth in line is implementation risk. Under implementation risk, a couple of points. Number 1, lengthy implementation time. It takes 1 to 4 years for an ERP to get completed. In that time, what if the technological advancements happen? Yeah, what if technology keeps changing? What if some employees who were supposed to do some ERP work, they leave the organization and go, I have to train another person. So employee turnover is possible and technological advancements are possible through the period of implementation of ERP. Okay, lengthy implementation time. Insufficient funding. Okay. I need to allocate the necessary funds for my contingencies. Okay, so for that I need to consult with experts that what are the possible situations in which I may require an outflow of money. Data safety. One set of data. So ERP means I am migrating my entire organization data under one common database. If that data is lost, my entire business will come to a standstill. I cannot operate because everything is in that ERP and now that ERP is not working. Okay, so arrange for a backup properly. Data safety. So point number 1 is lengthy implementation time. Point number 2 is insufficient funding. Point number 3, data safety. Point number 4 is data security. Data access, okay. Fine, we will go to speed of operation. Use data warehousing technique and upgrade. Okay, speed of operation, use the data warehousing technique and upgrade the data. System failure. Having a single system and central database is risky. In case that system fails, everything will go for a toss. System failure is similar to data safety. Next, we have data access. Under an ERP, all the modules are together. Do you want someone to see the entire list of your customer database? Yeah, tomorrow if they leave the organization with that report, yeah, they will be able to take your customers into their company. Right, so data access, possibility to access unauthorized data. So now I told you every risk has a control. Now this control is going to be RBAC. Restrict the access to the authorized users. Post-implementation risk. Now that the ERP has been implemented, there is only one risk, which is lifelong commitment. I need to be committed to my ERP. After 6 months, I cannot say, oh no, I want the old system back. Because it took you 4 years to develop that system. Okay, so I need to be with that system for my entire life. Lifelong commitment means upgrading it, maintaining it. Yes, lifelong commitment. Can we quickly revise the previous one, which is implementation risk, lengthy implementation time, insufficient funding, data security, speed of operations, and then we had system failure, and finally data access. 2 points on data access and data security or safety, data safety. Okay. Next, what is the meaning of role-based access controls? Role-based access controls, RBAC. People should do things only for what they are meant for. Okay, if they try to do something else, then it will result in a disaster. So the sales guy should be able to take care of the customer database. Finance guy should be able to take care of the payroll. The engineering guy should be able to do the code base. An engineering guy cannot take care of the customer database. They cannot do interactivity. So this is the meaning of role-based access control, giving the access only based on the role of the person. For example, a visitor, when he walks into an office, he gets an access card. That access card is different from the new joinee's access card, it's different from the manager's access card, right? Okay. RBAC approach restricting system access to authorized users. It is based on need to know and need to do basis. An example of RBAC software is Identity and Access Management, IAM by Google. Identity and Access Management. Two types of RBAC, MACDAC, mandatory access control, discretionary access control. What is mandatory access control and discretionary? Mandatory, defined by the system admin, strictly enforced. For example, I have a server room and I have to go with a password or a PIN, then it is applicable throughout the organization. No one can go in without a PIN or a password. Okay, strictly enforced. Discretionary access controls involve physical or digital measures. It is less restrictive in nature. So I can tell that, okay, if it is senior management, if it is the chairman or the CEO, then he need not follow this rule, this control. Discretionary access control based on the discretion of the person. Clear. Types of access, RTP question again, 4 types of access. Create, alter, view, print. Create, alter, view, print. Create, alter, view and print. Create a transaction, alter a transaction, view a transaction or print out a transaction. 4 types of accesses that can be given. So now these 4 need to be defined in my RBAC. Defined when I am doing my RBAC. Audit of ERP system. We are going very fast. It's a rapid revision, guys. ERP is producing CAR reports, complete, accurate, reliable reports. Are they structured? Are the reports structured, timely? Now we've moved on to auditing the ERP systems. So far we were doing benefits of ERP system, risks in ERP system, what is RBAC. Now we're doing audit of ERP systems. And the controls. We've already studied in our chapter number 1 that we have 2 types of controls, ITGC and your application control. ITGC and your application controls. So many questions that CA can ask during an ERP audit. Yeah, so let's come here. The auditing aspects in an ERP system. Okay, audit of data, audit of processes. Now, audit of data means physical safety and logical safety, which means access controls. Physical safety and logical safety. Logical means access controls. Logical means going inside the system and doing something, for which you need access controls. So, physical safety and access controls. Audit of processes. One is functional audit and one more is input validation. Functional audit means defining the process and checking if everything in the process is correct. Okay, going through the entire process and checking if it's correct. Input validations. What are the rules and conditions for any person entering the input into the system? For example, there is a cell given where you can enter only the numeric data. Yeah, in such a case, alphabetical data should not be allowed. So, input validation. The rules for entering input. Physical safety, physical control over data. You can have logs, this, that. We will do that in our chapter number 3. Access control, need to know, need to do basis. Functional audit, check all the processes. Check your purchase, salary, recruitment process. Audit of, input validations, checks rules for input of data. For example, can I enter inventory? Can I make a purchase bill with quantity as 0 and rate as say 1 lakh? Can I make a purchase bill? No. No purchases should be entered where quantity is 0. All these are the input validation rules. Okay. So, auditing aspects of ERP, audit of data, audit of processes. Audit of data, audit of processes. Under audit of data, we have physical safety of the data and access control. Physical safety of data and access control. Under auditing of processes, we have functional audit and input validation rules. Input validation rules. Clear? Yeah. So there's a paragraph which talks about what is a business process. Set of activities. Process we already discussed. Input, and then set of activities run on that to get some desired output. Okay. Now, happy family is one where everyone is integrated, or everyone's decisions are binding on each other, right? Now, in case a family which has to be happy, you need to have all the members of the family in a very, very close-knit environment, yeah? Close-knit or an integrated environment. Similarly, your business modules in your ERP need to be linked at the right places, with each other. So, ERP modules, so many ERP modules: financial module, controlling module, sales and distribution module, human resource module, production planning module, and materials management module. Apart from that, we have quality management, plant maintenance, project planning, supply chain, CRM, customer relationship module, and your accounting module. Okay, so you have so many modules in a ERP software, Now let us see. Okay, business categories of business process modules is nothing but you have to identify if you're a manufacturing concern, if you're a trading concern, or if you're a service oriented concern, because based on the nature of your business, you're going to put down the modules. Financial accounting key module. Okay, since we've done this in the detailed lecture, we will not be taking it through here. What we'll do is learn the important question. For example, controlling module. Under the controlling module, cost element and revenue element is a part of the controlling module. Controlling, the name suggests that something which is planned, okay, and you have to compare that with the actual and understand the deviation. The controlling module provides information to managers and decision makers to understand where the company's money is being spent. It is not restricted by any legal requirements. It is essentially an internal cost accounting tool, where the company's money is spent and comparing the actual data with planned data. Now, under controlling module, we have a question called the key features of a controlling module. Okay, so it's basically a cost accounting tool. The key features of a controlling module. 3, 2, 2. So we have cost 3 points, profit 2 points, 2 points on profit, and others 2 points. In this others, we have activity based costing and internal order. Okay, cost, we have cost center accounting, cost element accounting, and we have product cost controlling. Under profit, we have profitability center accounting and profitability element accounting. Okay, so under the features, cost element accounting, cost center accounting, cost element accounting, cost center, and the third one is product cost accounting, product cost controlling. Okay, that means that analyze the optimal price of a product. Then we have activity based accounting, okay, to understand the cross departmental business cost. And internal orders, 322, remember 322, internal orders, cost of a specific job or service. Profitability analysis, profit center accounting. Profitability analysis and profit center accounting. Company's profit by individual market segment, profit and loss of individual areas. Okay. Important to remember the side headings of this question. Key features of the controlling module. Key features, so on cost, I have 3. One is my cost center accounting. Second is my cost element accounting. Third is my product cost controlling. Then I have profit 2 points. In my profits, boys and girls, in my profits I have profitability analysis, and my profit center accounting. Profit center accounting. Others 2. Under others, first I have ABC, activity based costing. Second, I have IO, internal orders, cost of a specific task. Internal orders, clear with the controlling module. Next is the sales and distribution module. You already know the activities in the sales and distribution module. Here are a few key features. You have to set up the organization structure, set up the pricing components, set up the sales documents, GST invoice, GST compliant invoice, setting up customer master data. These are the key features, not the steps of activities in the sales and distribution module. So, we are going to look at the activities, pre-sales activities. You do some demo, you do some advertisement, you do some calling, pre-sale activities. After that, you raise a pro forma invoice. Send it to your customer. Source the inventory, get the inventory, deliver the material, billing and receipt. In MCQ, they sometimes ask you to arrange this in the right order. Okay. It is also a descriptive question in the exam, descriptive or MCQ. Okay. Pre-sale activities, sales order or pro forma invoice, inventory sourcing, material delivery, billing and receipt. Yes, boys and girls, clear with this? Human resource module. What is the process of human resource? If you remember, in our chapter number 1, we had studied the activities involved in human resources. ROCT was the keyword. Recruiting and onboarding. Orientation, O for orientation. C for career planning or career development. And T was for termination. In this also they are saying that there are so many processes in the human resources module. You have to find a way of linking that in your ERP, or you need to have a separate software to do your HR work. Production planning module. In the production, issue of raw materials from the store, convert it into WIP finished goods and then transfer it to godown. Just the process of production planning. Now, in this module, we have to create many master datas, okay, and then because it talks about inventory items, we have sales and operation planning, distribution resource planning, master production schedule, material requirement planning, yeah, capacity planning and product cost planning. How much capacity you can take, product cost planning, what is the cost that you want to allocate to each of the products, right? Production planning module or the production planning module should help me to do all these activities: sales and operation planning, distribution resource planning, master production scheduling, MRP, materials requirement planning, yeah, and then I need to be able to do capacity planning and cost allocation. Okay. Clear? Move on to the next thing. Material management module. Get a PR, get a purchase requisition from the production department. You know what is the difference between a production module and a material management module? Yes. So, production department is someone who is at the factory, who is in charge of taking care of the production. If they want any material, they will not spend their time go in the market and look for vendors and the correct material, correct prices. They will have a separate material management team to whom they will issue the purchase requisition. The requisition that these are the materials, we're out of it, we want it back in stock. Now, this materials team will go to the market and get the right suppliers. Purchase requisition from the production department needs to be received and entered into the ERP system. Evaluation of requisition. Do I have any controls to check that, okay, this is received, but have you checked if they really need that or it's a dummy requisition? Evaluation of requisition, asking for quotation from so many suppliers. Evaluating the quotations. All this needs to be put in the system. Generating a purchase order. Give a purchase order. Receipt of material. Issue of material to the production department. Whatever material I've got, I issue it to the production department and I make the payment for it and account it. Clear? So, material management module, very simple. Quality management module. The code word for this is Pikachu. Okay, quality management module. Now, P stands for planning. I stands for improvement, quality improvement. quality control, C for quality control, and A for quality assurance, quality assurance. P for planning, I for improvement, quality control and quality assurance, quality control and quality assurance. Quality planning, plan the production activities to meet the demand in time. Okay. Improvement, have corrective actions and update your processes regularly. Control, have certain benchmarked standards and go and adhere to those timelines. Quality assurance, identify various processes, document the process of maintaining the quality. Assurance means you give an assurance to your customers that we have certain strict processes in our company that we have to follow. So, we do a strict quality assurance check. Clear? PICA, P for planning, I for quality implementation, C for quality control, A for quality assurance. Plant maintenance module, plant maintenance to, in case there is a big machinery, that machinery needs to be working at its best, optimum use to achieve minimum breakdown, good working conditions at a lower cost, optimum use and ensure availability of the machine. It should not be that so many resources are coming together that this machine is not available, availability of the machine. Next we have project system and module, create a template, create a project, project planning, budgeting, implementation and completion. Yeah. Supply chain module, right from the journey of needing the material to the journey of getting the material is known as supply chain. Okay. Now, the last module that we are going to discuss is customer relationship management module. Now, customer relationship management module is growing very fast right now, the customer relationship module. Okay. Why? Because it helps the organization in order to do targeted marketing, in order to do the right directional marketing so that they can get many number of sales from the customers, from the market. So, customer increases the satisfaction, increases the relationships, contacts can be stored in that module. So, it is a module which tells you that what time did you call this person, what did the person say, you can make notes in that. Do you want to follow up, you can set a reminder alarm in that if you want to follow up, right. So, customer relationship management means helps in targeting, it is a module that takes care of the entire management of your customers. Key benefits of customer relationship management, important question, key benefits of your customer relationship management. Under that I have the first point, obviously increase in customer satisfaction, increase in revenue. Because my customers are satisfied, my revenue is going to be higher. Improved customer relationship or improved customer satisfaction, because of which my revenue is high. Maximize upselling and cross-selling. Maximize upselling and cross-selling. What is the meaning of upselling and cross-selling, everyone? Yeah, see, upselling means selling a upper version or a premium version of the same product. I go into a store to buy iPhone 11. So, they say, ma'am, you know what you should do? You should go and buy the iPhone 12 Pro, I don't know if that's even a model. iPhone 12, you should go and buy that because you have discounts applicable on that and you have better features. Instead of 4, you have 5, 6 cameras behind that phone and you can go and buy that improved phone. So, that is upselling, selling a premium version of the same product. I go to buy a 49-inch TV, but they say instead of 49, you can go in for a 55-inch TV. Upselling. Cross-selling means selling related items or related products. Cross-selling, selling related products. For example, if I go to buy a car, they tell me that what you should do is buy an insurance along with this car. Okay, selling related. If I go to buy iPhone, they say you should buy AirPods along with this. It's not the premium version of the same product, but it is a related product, complementary or a related product. So, because of your customer relationship management module, you can maximize upselling and cross-selling. How you can maximize? Because you will have the database of the customers who you think potentially can buy a higher model of the phone. You will have all the data to do the analytics. So, you can have some discounts on the new model of the phone. Better internal communication, better internal communication. So with a CRM module, everything is recorded. What I've spoken to them is recorded, what notes I've made is recorded, everything is recorded. Where it is recorded, I have a very good internal communication with my own team, where they know that what task I have left, should they continue or should they do in addition anything to that to get the customer. Better internal communication, optimizing marketing, which means targeted marketing. Optimizing marketing, it means targeted marketing, selling the right products to the right people, right products to the right people. Okay, all of you, come on, let us quickly revise customer relationship module. 5 points in that. Yeah, increase the customer revenue, increase the customer satisfaction or experience. After that, we have maximize upselling and cross-selling, better internal communication, maximize upselling, cross-selling, better internal communication, and perform a targeted marketing, perform targeted marketing, right? Thank you very much, guys. I'll see you soon in the next part.